Now to Phillip Streible, Chief Market Strategist at Blue Align Futures. He's going to give us a broad overview of the commodity market, one of our favorites. Phillip, thanks so much for coming on the show.
Yeah, thanks for having me. One thing I want to point out is that it's colder in Texas than it is in Alaska right now.
Unbelievable. Yeah. Do you, what about people down there without heat, many of them, but they've been told stay off the highways?
Yeah, unbelievable. So, I mean, obviously that's been all the news this morning with crude oil prices up 5% on the day, natural gas and gasoline all up substantially, oil breaking through $60 a barrel. A lot of people are trying to ask themselves, is it going to continue to run from here? So that's what we're digesting. We're looking at all the data with regards to that.
What do you think, though? I mean, obviously, the weather will warm up after a while. Will oil be able to hold above $60, get back above 60 and hold there, do you think, Phillip?
So we really believe that oil is going to be one of the best performing commodities. And I reiterated that long before this type of situation occurred. I mean, this is like a once in every 7 to 10 years, you get this kind of weather development, whether it's a hurricane, whether it's excessive heat, or one of these, cold fronts that strikes an area that's not prepared for it. But the reality is that, crude oil prices over the last quarter are up about 43%, gasoline's up 50%. And oil futures are going to continue to rise because of the fact that it's a reopening play. As you get more people vaccinated, you're going to see more demand for crude oil and more demand for, energy in general. So they're going to start to get mobile. You'll start to see jet fuel. You'll see cruise lines start to operate again. Some of the travel leisure stocks will all continue to take off. And oil prices, we really believe, could hit, $70, $75 by mid-year.
Sorry, what was that projection on oil again?
I really believe $70 to $75 is completely not out of the question whatsoever, especially if OPEC continues to do a great job on curbing their production. Since last June, they've already taken 130 million barrels, out of the supply. So they're really doing their job to hold prices, higher and curb that excess supply.
Whoa, that was $70 to $75 oil. That would be quite the move, okay. Talk to us about gold, as you've been spending a lot of time on gold, writing about it. You do know that U.S. bond yields have been going up, typically not good for gold.
Yeah, ever since the top in gold was about August, and that was also the bottom in bond yields. Bond yields, 10-year yields, hit about 0.4%. That was a double bottom. Since then, they've been really escalating higher. They broke through 1%. We were bearish on treasuries. We were out of the gold market. Today, we've got an excessive washout. We are looking at doing some bottom picking on gold just for a day trade standpoint or a couple days standpoint, not any kind of transition change. Gold should still continue to face some headwinds. We were just looking at it as intermediate term oversold on gold, especially when you go out to December below $1,800, because the back half of the year, that's when rates will have start to compress again, and all the things that you should be selling now, like treasuries, like gold, like utilities, you'll start to cover those in that second half and you'll get the rise.
So just walk us by that again. So you think gold could be under pressure for a while, but then rally again?
So here's the deal with gold is that yields are going to continue to push higher at an accelerating rate. They're going to blow off to the upside. You'll see the 10-year note go through 1.5%. That's when the Federal Reserve will most likely start to come in, institute some kind of yield curve control. You're also going to see the employment data is going to start to accelerate at an alarming level. People will start to get jobs as spring comes around and summer. But halfway through the year, that's when all your economic data will compress. Any business that wanted to reopen will most likely have done it. Anyone who wanted to get a job will most likely have taken one. At that point, you'll see a slowdown on the curve on economic growth. This is in the back half of the year. And that's when things like gold, like the dollar, like treasury yields will back off, bonds will start to come up again. So when you look at the full cycle, you could really see how it plays out.
Give us another favorite commodity idea for this week, or touch on one of the areas you just did, Phillip. Do you have one commodity trade you think investor or viewers should investigate?
One that a lot of people missed was the platinum market. You've got that second wave of COVID, and you saw that was over in that second variant in South Africa. You saw some social distancing in the mining. The production goes down. The demand for it, especially from this green energy standpoint, platinum, palladium, rhodium, those are all continuing to see increased demand for carbon emissions play. So I think that's a really good one. All your grain markets have done fantastic, increasing demand from China. You've got some small weather issues going on, but there's a lot of good commodities. Commodity super cycle is here.
Philip, we'll leave it there on that note. I'm sure that's music to the ears of the commodity bulls who tune into our show. Always great talking to you. Thanks very much, man.